Strong earnings, new tariffs, rising oil, conflicting economic data, 5 straight sessions of market declines this week had no shortage of headlines. But which of them actually mattered? You are watching the Finance Sunday, where every Sunday we bring you the complete story behind the week's biggest market events in just one video. So, without wasting any time, let's rewind the week. This wasn't an easy week for the Dalal Street. निफ्टी 2% तक गिरा था जो सेंसेक्स था वो भी लाल ही था मोर इम्पोर्टेंटली द मार्केट क्लोज लोअर इन एवरी सिंगल ट्रेडिंग सेशन a sign that investors preferred cautious over confidence. Now a falling market isn't unusual. Happens more or less. What made this week different was the contradictions. While the indexes were falling, the news flow wasn't entirely negative. Corporate earnings were coming in. Some companies actually delivered excellent results. India's core sector data remained healthy, yet buyers simply weren't willing to chase the market. That tells you something very important. This wasn't panic selling, it was cautious selling. Investors weren't running away from the equities, they were becoming much more selective. Sector wise, the picture was equally very interesting. Auto stocks continue to show resilience, helped by strong earnings and healthy demand. On the other hand, sectors directly exposed to rising crude oil prices like aviation and oil marketing companies remained under pressure. And by the end of the week, one thing had become very clear. The market wasn't reacting to just one headline, multiple stories were unfolding at the same time. So let's look at the bigger events that actually shaped investor sentiment this week. Because once you connect these dots, the market's behavior starts to make a lot more sense. The first story was, of course, crude oil. After fresh geopolitical tension involving the US, Iran, and renewed attacks around key shipping routes, Brent crude briefly crossed $100 marks before easing. Now, we have spoken about oil many times over the last few months, so I won't spend too much time on it. But it's still important because expensive oil creates a chain reaction. Higher import costs, pressure on inflation, pressure on companies that depends heavily on fuel, and naturally pressure on the market. But oil wasn't the only reason investors stayed cautious. Another headline quietly flew under the radar. US announced a fresh 10% tariff coverage covering a large share of Indian exports, while also laying out a long-term tariff roadmap for generic medicines. Now, this isn't something that's going to change corporate profits overnight, but markets don't wait for problems to arrive. They start pricing in future risks much earlier. And this exactly why the announcement caught investors' attention. Then came another interesting data point. India's core infrastructure output grew at its fastest pace in 5 months, a positive sign that industrial activity is still holding up well. But almost immediately after that, another report gained a slightly different picture. India's composite PMI, which tracks overall business activity, slowed to its weakest reading in more than 3 years. At first, these two numbers seem to contradict each other. One suggests strength, the other suggests slowing momentum. But that's exactly what made this week so interesting. The economy isn't sending one clear signal anymore. Different parts of the economy are telling different stories. And when investors receive mixed signals, they usually become more cautious. Which brings us to the bigger story of the week. Because despite all these macro developments, the spotlight came firmly was on corporate earnings. And this earning session delivered one message loud and clear. Good results alone were no longer enough to impress the market. If there was one thing investors were looking forward to this week, it was earnings season. After all, quarterly results were where the headlines made reality. For weeks, analysts built expectations, companies prepared their numbers, and finally, investors get to see who is actually delivering. This week, some of India's biggest companies stepped up to report, and honestly, if you looked only at the numbers, you'd probably think it was fairly decent earnings session. But markets rarely stop at the headline. Let's start with the India's largest private bank, HDFC Bank. HDFC Bank reported another healthy quarter. Profits grew, asset quality remained stable. The overall business continued to look solid. Nothing in the report suggests the bank was suddenly in trouble. Yet, the stock fell around 3% after the results. Now, if you are new to investing, this probably sounds strange. A company performs well and the stock still falls. The answer lies in something the market cares about even more than the profits: expectations. Investors were hoping for stronger margin expansions and a clearer outlook going forward. The numbers were good, the expectations were even higher, and in the market, that gap is enough to move billions of rupees. The second bank, which was Axis Bank, once again, the headlines number looked impressive. Profit grew by more than 20%. Credit growth remained healthy. Operationally, it was another strong quarter, but just like HDFC Bank, the market wasn't convinced. The stock also corrected sharply after the results. Notice the pattern? For two of India's biggest banks, investors weren't asking how did this quarter go? They were asking, can they keep delivering if the environment becomes more difficult? It's a subtle difference, but it's exactly how markets think. Interestingly, not every bank faced the same reaction. ICICI Bank's results were also strong, but unlike some of its peers, investors were much more comfortable with the overall commentary and execution. That's an important reminder. The markets doesn't move entire sectors together. It judges every company individually, and sometimes management's outlook during the earning call matters just as much as the financial numbers themselves. While banking stocks struggled to impress, the auto sector quietly became one of the bright spots of the week. TVS Motors reported one of its strongest quarters in recent memory. Profits jumped more than 65%, supported by healthy domestic demand and strong premium motorcycle sales. Bajaj Auto also delivered another impressive quarter, backed by robust exports and strong operating margins. And then came another interesting announcement. Maruti decided to increase prices across several models. Now, normally, higher prices might worry customers, but from an investor's perspective, this sends a different signals. It suggests companies still believe in demand is healthy enough to absorb those increases, and that's exactly who and why auto stocks remained relatively resilient despite the broader weakness in the market. Of course, not every business had that luxury. For companies directly linked to fuel prices, this week was much more tougher. Indigo slipped into a loss as aviation fuel costs surged dramatically. The airline wasn't struggling because passengers disappeared. In fact, the demand remained healthy. Its biggest problem was simple: fuel had become much more expensive. Oil marketing companies faced similar pressure. BPCL, HPCL reflected the impact of rising crude oil prices and pricing pressures. It's a good reminder that sometimes even well-run businesses can struggle when macroeconomic conditions turn against them. If I had to pick one earning story that best captured this week, it would actually be Bandhan Bank. Not because its number was the weakest, but because of what management said. Along with the results, the bank lowered its guidance and pointed to rising uncertainty from geopolitical tension to liquidity concerns and a more challenging operating environment. And that's where the market reacted. Not to the past, but to the future, because ultimately investors don't buy yesterday's earnings, they buy tomorrow. They buy tomorrow's expectations. And that's when the entire week finally started to make sense. Strong companies weren't being punished because they had bad quarters, they were being judged against a future that suddenly looked far from certain, which raises a much more bigger question. Was this uncertainty only an Indian story, or was the rest of the world dealing with the same thing? So let's zoom out and look at the world. If you look at each headline individually: oil, tariff, PMI, earnings, they all seem like separate stories, but when you put them together, a pattern starts to emerge. This week, the market wasn't worried about what happened, it was worried about what could happen next. Think about it. Oil prices moved higher, raising concerns about inflation. US announced fresh tariffs, creating uncertainty for exporters. Business activity showed signs of slowing. And when companies reported earnings, investors weren't interested in celebrating the last 3 months. They wanted reassurance about the next three. That's why this week felt so uncomfortable because the market wasn't pricing today's economy, it was trying to price tomorrow's economy. And honestly, that's so much harder to do. There's one development from this week that I don't think got enough attention, the new US tariffs. Yeah, that's such a big issue now. Let's be clear. These tariffs are not going to derail India's economy overnight, but they are not going to suddenly destroy exports. And I think they tell us something much bigger. For the last few decades, globalization followed a simple logic. Manufacture was manufacture where it's cheapest, sell wherever there is demand, everyone benefits. Now that logic is slowly changing. Countries are thinking more about resilience than efficiency, more about domestic manufacturing than global supply chains, more about economic security than free trade. And this week's announcement were another reminder of that shift. Why does this matter to us? Because India's growth story has been built on being an efficient, competitive economy that can serve global markets. If the rules of the global trade begin to change, Indian companies will have to adapt. Some will and some won't. And that's exactly why investors are becoming far more selective than they were a few years back. This cautious mood wasn't limited to India. Across global markets, investors were watching the same themes: oil, inflation, trade, and interest rates. US markets remained volatile as investors tried to understand whether higher energy prices could keep inflation elevated for longer. Because if inflation stays high, central banks may keep interest rates higher for longer as well. Gold quietly gained attention as investors looked for relatively safer assets during the week's uncertainty. Meanwhile, the dollar stayed firm, adding another layer of pressure on emerging markets like India. The important takeaway: Indian markets weren't reacting in isolation, they were reacting to global environment that has become far more uncertain. If there is one lesson I take away from this week, it's this: markets don't reward good companies. Markets reward companies that do better than investors expected. That's why you can see a company report healthy profits and still watch its stock fall. As investors, we often focus on one question: did the company do well? But the market asks a different question: did the company surprise us? And that difference is where the stock price moves. It's simple lesson. But this week we saw play it out and again. Looking ahead, there are three things I'll be watching closely. First, oil prices, of course, not because they have become the only story, but because they continue to influence inflation, company cost, and overall market sentiment. Second, earnings session. More companies are set to report results after this week's reaction. The market has made one thing very clear: it wants consistency, not just one good quarter. And finally, keep an eye on global developments, trade policies, geopolitics, and any sign that business activity is either stabilizing or slowing further, because those are the factors likely to shape investor sentiment in the coming weeks. Now, to summarize it up, to sum it up, every week markets give us hundreds of headlines. Some disappear within a day, some shapes the next few months. And then there are weeks like this one, weeks that quietly hint at bigger changes beneath the surface. This week reminded us that strong earnings season alone do not guarantee higher stock prices, that investors are becoming much more selective and educated, and that the world economy continues to become a little more uncertain with every new geopolitical and trade development. Whether that uncertainty turns into opportunity or risk will depend on how companies adapt over the coming quarters. That's the story of this week. Now, just what happened, but what the market was trying to tell us. Thank you for watching the Finance Sunday. If you found this recap useful, let me know what you think about the biggest story of the week was. I'll see you next Sunday with same enthusiasm. So make sure you subscribe to my channel. I'm a new creator, so I want it.